Good morning traders, Joseph here from Eightcap. So we had a very interesting night last night in terms of currencies and commodities and stocks to a lesser degree. Stocks finished lower. Coronavirus still continues to be a worry. They had an increase in cases in South Korea. Now we're just looking at oil now. So oil made a very nice dash during the day yesterday, but it failed to hold that move after very strongly rallied the day before. So it fell 1.68% from its high and finished flat. Now we'll move on to over the currency because they really put on a very interesting show last night. So we saw a very strong USD, well, a strong to very strong USD, a very weak yen, and very strong gold prices. So a little bit mixed in what's normally seen from the markets. Well, so it's not often you see the dollar jumping to risk and risk jumping to the yen. Normally those two like to move in the same direction, as they're normally both seen as safe havens. So the questions asked now is what is happening to the yen, and has the yen started to lose that safe haven status? It's a bit early to call that at the moment, but there was a bit of a change last night. Now, why the yen's having some problems at the moment is mainly due to the Japanese economy. The Japanese economy currently has negative interest rates, there's recession worries, and their GDP failed to grow as expected, which is putting some real worry on the state of the Japanese economy and its future. So they also have a aging workforce, and basically, to put it frankly, there are not enough babies to cover the workforce, the aging workforce at the moment. So there's a few things to watch with the Japanese economy at the moment. And also, they are getting hit quite hard by coronavirus in terms of tourism and other areas in manufacturing and supply. So there's quite a few things going on at the moment on a negative front for Japan. We can see this yesterday, the yen was absolutely destroyed. We can see this two-day rally from the USD to the yen. It was a unbelievable move. We saw, it's just over 2% in 2 days, and this was the same across the board. So we can see that the pound, which was quite weak to the USD, finished high for the second day to the yen, and the euro, which has been having all sorts of issues to the USD, it gained in its 2 days it's gained 1.98%. And we also saw the Aussie dollar, which has been battered, lost ground to the yen, but it's hardly the same type of selling that we're seeing to the USD. So we'll just touch on the CAD. So the CAD just really showed how strong the USD is at the moment. It formed a 0.30% rally, and that was not a bad move considering that oil, really was, it jumped quite strongly during the day, and then but failed to hold those gains. So the dollar CAD is also moving higher at this stage today, and we've seen a break of this trend here, and there's some support that formed at the opening yesterday's session. So we want to see continuation now. If buyers can hold this move and push higher, the next resistance, or key resistance, the short-term resistance here for buyers to beat, and then the next key resistance up around at 33.15 to 33.20. Now we'll just get on to some of the crosses the majors to the USD. We can see the pound broke below the 28.80 point, it hit a new low of 28.46. We saw a bounce back there. There is some support around that area down to the 28.30 level, and the EURUSD is higher this morning, but it did fail to hold that rally overnight, and it did hit new lows. So that was down at 107.77, and the Aussie dollar was absolutely trounced yesterday. We saw a decline of 0.90%, and it's taken it back to levels not seen since the GFC. It's currently trading at 66.12, and that made a strong breakout below this low here at 6662 and broke all those lows as well. And this is the key low that it was beaten yesterday. So The Aussie dollar at the moment is under some numerous influences. Now, some of the key ones are the employment data came out mixed yesterday. Job creation went up, but unemployment went up as well. So there's now real thoughts about what the RBA is going to do next. Now, so there is ideas that the RBA is going to come in with another rate cut to sort of try and stimulate the economy. The issues the RBA is facing is the housing market, and they did say that they were hesitant to raise the rates due to the current state of the housing market. So the housing market's really bounced back from lows that we're seeing, and this is really spurred on by some of the low interest rates that were put forward by the RBA. And the worry is that if they do cut rates, it's going to just refire the housing market again, and there is a worry on that side. But on the other side of the coin, unemployment's gone up, and we're seeing the real negative impact to the economy from coronavirus, which could also accelerate as time progresses. So not very easy at the moment for the RBA. So we'll be watching with interest at the next meeting or two to see if they do come through with a new rate cut or not. Now, coming up tonight, we have a lot of flash data coming on Europe from France and Germany, and quite late in the late Friday night, early Saturday morning, we have US flash data coming out as well. So keep an eye out on them. With the current state of the euro and the pound, we'll have an eye on those flash figures coming in from the EU to show how things, data-wise, are going in the EU on the manufacturing and services side. So have a fantastic trading day and enjoy your weekend. And until next week, trading week. Bye for now.